of what are the various stages of and what are the various documentary evidences that are useful for validation the assess to assess the value of goods and services. Audible? వినిపిస్తుందా నాన్న? కరెక్ట్ లైన్.
వినపడతాను సార్.
హలో, వినిపిస్తుందా? ఇందాక కట్ అయిపోయింది. ఓకే. స్క్రీన్ షేర్ అవుతుందా నాన్న?
అవుతుంది సార్.
ఏముంది స్క్రీన్ పైన ఏం కనిపిస్తుంది?
హౌ టు డిటర్మైన్ అసెసిబుల్ వాల్యూ సార్.
ఓకే ఓకే. So how to determine the assessable value of goods and services that are imported from outside India. The determination of assessable value is very important aspect in case of international trade as well as in domestic trade. The valuation of goods for the purpose of excise duty is important due to three reasons. Because number one, where the rates of duty are on ad valorem basis, assessable value of the final goods are unfit for consumption or for marketing has to be found out before the amount of duty leviable thereon is determined and paid. So the valuation of goods and services for assessment purpose is very important at each and every stage, because at each and every stage whatever the value addition whatever the value added by the seller to the buyer, on the value addition, they have to pay tax to the government, both in case of internal trade as well as in case of international trade. Whatever the trade may be, at each and every stage of supply of goods and services, the tax will be levied and collected. Therefore, assessment of the value of assessable value of the goods is very, very important, not only at final stage but at each and every stage. That means when the goods are moving from manufacturer to ultimate consumer, there may be several stages, there may be several stages through which the product will pass on. At each and every stage, the value of the goods will increase. The value of the goods will increase. What is that increase? On that increased value, the government is going to levy taxes. Therefore, at each and every stage, the assessable value of the goods and services is to be determined with utmost care so as to get the real assessable value of the goods and services, so as to levy and collect the original taxes or original duty on the goods and services. Suppose if the assessable value is determined wrongly, that means assessable value of the goods has been less determined or determined less than what its actual value, then automatically the tax levied on the less accessible value will also be less, as on reduced balance or reduced value only the taxes will be levied. Therefore, it is the need of the hour, to assess the value of the goods at each and every stage, otherwise the uh, value of the goods or the um, on those goods may not be determined in a proper way. Next, number two, the second reason why the assessable value is important is, though the value of goods is required to be declared in assessee's invoice, though the value of goods is required to be declared in assessee's invoice, the invoice value is not necessarily the acceptable value under section 4. So as per section 4 of Customs Duty Act, generally the seller will issue an invoice while selling the goods. Generally, the seller will issue invoice while selling the goods. So in the invoice, he mentioned what are the various goods that are sold to which person, quantity, rate, value, all these things, tax, all these things will be mentioned in the invoice. But 100% this seller's invoice, 100% this seller's invoice may not have the acceptable value, may not depict the acceptable value under section 4. Therefore, the customs officers or customs department has to properly assess the value of the goods. But don't believe the value which is mentioned in the invoice. Don't take it as granted that assessable value is that is the value, that is the only value which is mentioned in the invoice. Sometimes in the invoice there may be some uh, wrong
Good
placing
afternoon, sir.
of the price, wrong placing of price. Therefore, 100% invoice price may not be taken as accessible value. It's not necessarily the acceptable value to the customs officers. Therefore, they have to properly assess the uh, values. Next, number three, the most authoritative exposition. The most authoritative exposition of section 4 is contained in the case of Union in India versus Bombay Tires International Limited. So on section 4, on section 4, there was a case in the Supreme Court. There was a case in the Supreme Court on section 4. That case is between Union of India versus Bombay Tires International Limited. This case was run between Union of India, that means the central government, and Bombay Tires International Limited. Had gone a gate up to which had to be included in the price. So in that case, what the Supreme Court says that whatever the cost incurred by the manufacturer up to reaching of its factory gate, up to that point, all the expenses incurred by the manufacturer should include in the price of the product. After getting out of the gate, after coming out of the gate, all costs may not be addable, all costs may not be uh, addable to the prices of the product. But costs incurred beyond the factory gate were not includable. They are not includable. But warranty service and advertisement costs, warranty services, that means the expenses incurred for warranty. So not only the care to bring up to factory gate, but the warranty services and advertisement costs also should add to the price of the product, so that on that price the customs officers will levy the taxes on the why this price is fixed, increased due to adding up all the expenses. If the price increases, automatically the tax to be collected on the increased price, the government will increase the tax. The tax collection will increase, because always the tax will be levied on value addition. So what is the tax on 100 rupees and what is the tax on 50 rupees? Suppose a particular product has sold for 100 rupees. So the tax rate is suppose for example 10%. What is the tax on 100 rupees? 10% means it is 10 rupees. 10 rupees tax to be collected or paid. Suppose if the same product is sold for 50 rupees, on 50 rupees they have to collect tax 10%. How much? 5 rupees. So whatever the value added, addition, on additional value only you have to collect the tax, not on the reduced uh, price. Okay, so warranty services and advertisement costs are also to be added for the goods as they increase the marketability of the factory at the gate. So because of these three reasons, the assessable value is to be properly decided by the government. Next, route of imports. Route of imports. That means if you want to import goods from outside India, how the route, in what route the goods will come to you, in what route the goods will come to you. The first, manufacturer. The goods will be manufactured by the producer or the manufacturer. First, he will produce the goods, he will manufacture the goods. So he is the initial inventor of the goods. He is the initial inventor of the goods. He is producing the product. Okay. So after manufacturing, the manufacturer will hand over the goods to the supplier. The manufacturer will hand over the goods to the supplier. Okay. So the supplier will take goods from the manufacturer. The goods have been transferred from manufacturer to the supplier. The supplier will go to the shipping company, that is a port, shipping port. He will book the products because we have placed the orders. We have placed for supply of goods. Therefore, the goods we ordered to the manufacturer or supplier, that goods will be shipped, or he will book the goods, the ship of the exporter, in the port of the exporter. That means suppose for example we have placed an order for certain goods in the America, for example. So America ship company, the supplier of the America will book the goods in the ship of America. Okay, so goods will go to the shipping company. Next, that shipping company, after booking goods from the supplier, they fulfill all the formalities, they collect all the taxes, and the packaging will be done by the shipping company, and goods will be. What is shipping ports are available. Visakhapatnam, Bombay, Calcutta. Okay. Uh, so there are three or more, four main international ports are there. So whatever the nearest port, as far as Andhra Pradesh is concerned, Vizag is the nearest port, or Bombay may be nearest port. Whatever the port, nearest port of the importer, to that port the goods will be reached. And then the importer will go to the port, the importer will go to the port and he over and he will make arrangements to bring goods from shipping or shipping shipping port to the destination place by road or by train. We make arrangements. Okay. Next, after importing, after reaching the goods to our place, then we will sell these goods to the wholesalers. We sell these goods to the wholesalers or dealers because it's a domestic business. So internationally we have imported goods. We have imported goods from America, and domestically we are transporting to the or we are selling to the wholesalers or dealers. Next, wholesalers or dealers to whom they sell to the retailer or consumer. They sell goods to the retailer or consumer. So these are the various stages or route map of imports. That means if you the imported goods are to reach the consumer, all these stages are to be crossed. All these stages are to be goods are to be processed from manufacturer to supplier, supplier to export to shipment, and export port, from export port to import port, then importer, wholesaler, and retailer and consumer. At each and every stage, the seller is charging price, and that price is a cost to the buyer. Okay, so you just see the manufacturer. Manufacturer sold goods to supplier. Here, whatever the price charged by the manufacturer, it is income to him, and whatever the price paid by the supplier is a cost to him. Then again on that cost he will add some profit and he will sell to the importer. So here the price is income to him, it is a cost to the importer. Again the importer is selling goods to the wholesaler or dealer. So here it is income for the importer and it is a cost to the wholesaler. And in the same manner, the wholesaler or the retailer, wholesaler or the dealer, he will sell goods to the retailers. Here it is an income to him, it is a cost to him. Therefore, the price charged by the seller is an income, the price paid by the buyer is a cost. So the seller will charge price for the products, and on that price he is expected to collect tax from the buyer. Okay, for at each and every stage, whatever it may be, each and every stage they are collecting directly or indirectly, they are collecting the taxes, and whatever the taxes or whatever That means higher up to this stage, up to fourth stage, manufacturer, supplier, port of shipment, port of import. Up to this stage, the goods will be under the control of customs office. Up to this stage, the goods will be under the control of customs office, and all the customs duties are to be paid at this stage. All the customs duties and all the customs cesses, whatever applicable, to be paid by the concerned parties. Then, after reaching the importer, then it is a domestic trade. After reaching the importer, here all the uh, on these transactions they have to pay the GST. They have to pay the GST because it is a domestic business. It is, since we have imported, it comes under the purview of Customs Act. And after importing, it is a domestic business, therefore GST rules will be applicable. So as per the GST, suppose if the importer sell goods within the state, CGST is GST is applicable. Suppose the importer sell goods to out of the state, then IGST will be levied. So like that. So the foreign trade, both international and national, at every stage, the imports will pass on several stages. Okay. So in this way, at each and every stage, at each and every stage, there are there are several documents. There are several documents that are useful for the government for assessing the value of the goods. At each and every stage, the several documents are made available to the government to assess the value of the goods. These documents will help the government in deciding the assessable value of the goods. Okay, so manufacturer's price list, quotation, sales invoice. So at the manufacturer price list may be verified, may be taken into consideration for deciding the assessable value. Quotation of the manufacturer or sales invoice issued by the manufacturer may be useful in deciding the assessable value of the product. Next, supplier's sales invoice or market prices. So supplier sales invoice. So supplier will issue invoice while selling the goods. So that sales invoice may be useful for deciding the assessable value. But you just remember that this the sales invoice issued by the manufacturer will be different. The sales invoice issued by the supplier will be different. There may be some value addition between the manufacturer and the supplier. Okay, the whatever the price at which the manufacturer sold to the supplier, at the same price he may not issue to the uh, next party because his expenses are added and his profit is added and the price will be increased. So market price of the products. Next, customs approved attested documents showing value adapted for levy of export duty and allied controls. So, while booking the goods in the shipping company or in the shipyard, so the attested documents, whatever the documents we produce, all those documents are useful in assessing the value of the goods in exports as well as in imports. Okay, so that's another document useful for deciding the assessable value of the goods. Next, the importers accounts books. The importer's accounts books may also be useful for assessing the true value of the goods imported. Goods imported. Because in the accounting system, whatever the value of goods we have purchased, the actual value or the original value has to be written in the books of accounts. Therefore, if you see the books of accounts of the uh, importer, automatically the value will be known to the everybody. The assessable value can be estimated by looking into the accounts books of the importers. Next, sales invoice issued by importers, wholesale dealer or net purchaser, market trend of prices of the goods. So after reaching the goods to the uh, importer, the importer will sell goods to the wholesaler and he will issue the invoice. Okay? So that invoice may be used for assessing the value of the goods. And sometimes the market trend of the goods, the market trend of prices of the goods may be considered for assessing the value of the goods. Okay. Next, sales invoice of wholesale dealers and the trend of prices in the market. So this wholesale dealer will sell goods to the retailers. The wholesale dealer will issue invoice by selling the goods to the retailer, and that invoice may be used for uh, assessing the value of the goods. And sometimes the trend of prices in the market may also be used for assessing the value of the goods. So this way, at each and every stage, at each and every stage, several documents that are useful for assessing the value of the goods, retail value of the goods. So the invoice values not only UCI FOB values of the goods in international price. So invoice values generally up to the importer's port price mentioned in the invoices will be CF price or price. So the market value is the wholesale market price at which the importers regularly selling import goods. So the market value sometimes becomes at market value of the importer. Data, both data are available readily at the customs officers. So whatever it may be, the customs officers may take consider may take into account these two aspects. Based on their experience, they can assess the value of the goods. They can assess the value of the goods. Okay. So these two are tangible and readily available data at the hands of the customs officer to arrive at the accessible value, a question related value of the goods. This is an approach that may be used by customs officer. The declared value is not acceptable. The declared value is not acceptable in law. So in this way, at various stages, the document with the document evidences the customs officers may uh, take these values into consideration to the invoices issued by the sellers and the trend in the prices of the goods may be considered and they can assess the value of the goods. Next, there are certain cases where they try to reject the accessible value of the goods. They try to accessible value of the goods. So there are two situations. One starting from the actual wholesale market price of the goods in question and giving necessary adjustments to adjust the post importation cost. Sometimes the importers may give less invoice price. In that case, they will not consider the prices mentioned in the invoice. Then they just take into account the market value of goods, and on that market value of the goods they are going to make certain adjustments and so that they can arrive the value of the goods at the importation stage. Okay? This is one approach I follow for in certain cases. Next, number two, second, to take as a base, the value given the Y invoice and make necessary adjustment for the factors influence the price in individual transaction. The second situation is that the invoice price may be taken into consideration, and for the invoice price, some necessary adjustments will be made for the different factors which influence the price of the product in case of individual transactions. Okay, in this way, the accessible value of the goods and services imported from outside India is decided by the uh, customs officers. The purpose of or the objective behind verifying the accessible value is that there should not be any tax evasion. There should not be tax evasion. There should not be any tax uh, avoidance. Everybody should follow the rules and regulations framed by the customs act or customs law. So, however, the default mode of recognition is the cleared transaction value plus elements that are added under law. So generally, most of the cases, the transaction value will be taken as a accessible value, and some adjustments will be or some elements are added to the transaction value so that the taxes customs may be claimed by the customs officers. Okay, so this is all about the asset how to determine the accessible value of the goods and services under Customs Act. What are the different rules through which the imported goods are uh, passed through different stages, and what are the different documentary evidences that are available at each and every stage, and how these documents are useful in assessing true value of the goods and services, and uh, all these things we have learned in this class. Okay, thank you very much for attending the class. And నెంబర్ పోస్ట్ చేయని వాళ్ళు ఎవరైనా ఉంటే ప్లీజ్ పోస్ట్ యువర్ నెంబర్ సో దట్ ఐ కెన్ నోట్ డౌన్. ఆల్రెడీ నోట్ చేసిన వాళ్ళు మళ్ళీ పోస్ట్ చేయాల్సిన అవసరం లేదు. పోస్ట్ చేసి క్లాస్ ఇస్ ఓవర్.
Thank you, sir.
Thank you, sir. Bye, sir.